Jozalapa, Tashidele, Lasso, Fiafulwa. Namaste everybody. Welcome back to our channel, Jhigu Economy. This is the channel where we take terrifyingly dense government economic data and translate it into plain, everyday human language. Every year, when the new monetary policy drops, we brace ourselves for an exhausting read. But if you download the text from the NRB website today, you'll notice something shocking. It's a lean, hyper focused, 4-page statement. Unlike in the past, where the central bank packed in over 50 pages of exhausting data, Governor Dr. Biswo Nath Poudel did a massive cleanup. All the analytical fluff separated into standalone reports. What we got today is pure, unadulterated policy. And looking at this crisp desk, you might think that nothing happened. Under points 14 and 15, the Nepal Rastra Bank announced the entire interest rate corridor. The policy rate at 4.5%, the standing deposit facility at 2.75%, and the bank rate at 6% is completely frozen. In plain English, the Nepal Rastra Bank just hit the pause button on tweaking interest rates. They aren't manipulating the base cost of money to fix the economy. Instead, they're completely overhauling the structural plumbing of the banking system itself. So, what does this plumbing overhaul actually mean for your wallet? Let's start with the absolute death of unlimited personal guarantees. If you dig into the text, there's a dry clause about reforming personal guarantees to eliminate unlimited liability for institutional borrowers. Let's decode what this actually means. Imagine you and your friends start a company and borrow 100 million rupees from a bank. Even though it's the company taking the loan, banks always make founders sign a personal guarantee. Historically, if the business failed, the bank could bypass the company's shield and liquidate your personal home, family land, or savings. There was no limit. The Nepal Rastra Bank is changing the game by removing rules that allow this boundless personal ruin. This changes the psychology of doing business in Nepal. It gives entrepreneurs the room to innovate without the terrifying fear that a genuine business failure will wipe out their family's livelihood. It protects the human beings behind the businesses. But corporate safety isn't the only fix. If you've been feeling the pinch of the sluggish economy, the Nepal Rastra Bank just dropped 4 major relief measures. The central bank knows the real economy has been sluggish, so they explicitly outlined 4 major fixes to get money flowing again. First, the blacklist breath of fresh air. The system is congested with people blacklisted over bounce checks. The Nepal Rastra Bank is stepping in to ensure that minor, unintentional payment delays don't completely log everyday citizens out of basic banking services. Second, stressed business lifelines. Non performing loans have been a massive headache. Instead of pulling the plug and seizing collateral, the Nepal Rastra Bank is introducing a framework to nurse sick businesses back to health. Third, a mature move for the stock market. No more arbitrary blanket rules on share loans. Now, how much you can borrow against the stock depends entirely on the financial soundness of the actual company. Strong fundamentals equal better leverage. Fourth, a push for green public transit. They are easing loan to value ratios for large public electric vehicles. Transport entrepreneurs need less upfront cash to buy electric buses, cutting fuel imports and boosting infrastructure. While these changes fix the visible economy, the Nepal Rastra Bank is also quietly managing the invisible plumbing of our foreign cash. Let's look at how the Nepal Rastra Bank handles foreign currency. This policy introduces sterilized intervention and encourages commercial banks to invest in foreign securities. Sounds like gibberish? Here's why it's a massive deal. Nepal has a unique problem. We have a massive mountain of foreign currency from record breaking remittances. When the Nepal Rastra Bank buys these US dollars to build our national reserves, we have to pump equivalent Nepali rupees into local banks. This creates a side effect, a massive wave of excess free cash sloshing around local banks, which can trigger inflation. To stop this, the Nepal Rastra Bank is opening 2 valves. They are letting banks safely invest excess cash abroad in things like US Treasury bills and using sterilized intervention, meaning when they inject rupees to buy dollars, they simultaneously pull that excess cash back out using internal central bank bonds. In short, they are ensuring that our foreign currency success doesn't accidentally cause domestic instability. It's high tech economic balancing. And this solid plumbing is exactly why the central bank isn't panicking about inflation or growth targets. Let's look at the macro floor and ceiling. To understand why the Nepal Rastra Bank has the luxury to focus 100% of its energy on these structural plumbing reforms, we have to look at our macroeconomic ceiling and floor. Think of a 5.5% inflation as a speed limit ceiling. The Nepal Rastra Bank wants to stay under it. Last year, we didn't just stay under, we kept it down to a historic 2.7%. With that track record, keeping inflation below the new 5.5% ceiling while chasing the government's aggressive 7% growth target is highly achievable. Now, think of foreign exchange reserves as a safety net floor. The legal mandate says that we must never drop below 7 months of import cover. Today, Nepal is standing on a mountain. We have an unbelievable 19.2 months of cover. There's virtually zero chance that we drop near that floor. The verdict? This isn't a shock therapy monetary policy. It's a stabilizing structural blueprint. The Nepal Rastra Bank is betting that by cleaning up the rules, the system will naturally become cheaper and more efficient for borrowers. But what do you think? Was keeping the interest rates unchanged the right move to control inflation? Or did the private sector need an aggressive rate cut to hit that 7% growth target? Let me know in the comments below. Don't forget to like and share this video and subscribe to Jhigu Economy. I'll see you next time. Bye!